This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, we saw a fairly quiet, choppy trading day on Monday as we started off the month of October. Here to walk us through what he saw in the trade action on Monday, starting off the new week and the new month, John Heinberg with Total Farm Marketing is our guest analyst here today. John, good to catch up with you. Hope you had a good weekend. And, coming back from the weekend, John, felt like a relatively kind of just quiet start to a new month and a new week. Not a whole lot happening in this grain and oilseed trade and livestock trade on Monday, John.
Yeah, we had some decent money flowing those outside markets, so that at least brought a little bit of money into the commodity space in general. You got the stock market did push almost 800 points higher at one time. Crude oil, $4 a barrel higher. So maybe we're seeing some price recovery there. Maybe it's good just to get September behind us. It's typically one of the worst months in terms of those equity markets. And now maybe we got some value out there. We'll see. Nothing's out of the woods in my mind there. But that's spilled over into the grains as well as the livestock sector. There's some money flow when you see cattle trade higher and grains trade higher. So that kind of tells you at least we got some money moving into the markets in general. But we kind of, like you said, not a strong day, but at least a positive day. And, holding on to those gains, at least in the core market from Friday, going to re-challenge some of those levels that we put in after that report. And beans at least holding on to some key support levels here, after those numbers last week on grain stocks came in a little bit disappointing.
Yeah, John, well, let's talk about this a little bit more. Friday, you mentioned that report. We saw a little bit of spread action. Soybeans took a big down day against corn and wheat. And then you come in Monday morning, we kind of saw a reversal of that spread just a little bit, the soybean wheat spread. But then, as you alluded to, corn kind of found its way back, finished okay. Wheat, outside of Chicago wheat, had a pretty mixed day, right around unchanged. But we think about that report Friday. Soybean number, I think a lot of folks surprised by that one, that the crop got larger, but still, you and I were talking about this off the air. We're still tight soybeans. I mean, we can't forget that and lose sight of that, I think, in this market right now.
Very much so. We added 30 million off the crop from last year that pushed that carryout number above expectations. That 230 million doesn't exactly fill up the whole bin, if you know what I mean, in that regard. So we are still extremely tight. We'll have to see how harvest goes. Obviously, now the focus will be on those October numbers. This might be one of our strongest weeks for bean harvest, at least in the area where I was over the weekend. Things were rolling pretty aggressively there as beans were ready to go. And so we'll start seeing that hit the marketplace. We're seeing that maybe on some of the cash basis levels out there too in the front end, where basis levels are just kind of saying we're good for the front. Now we need more for the deferred. So we'll have to kind of watch how this market handles that. Typically, though, we see selling pressure on a historical level into the 1st of October. Then we typically see good strength going past that first window of October, and we'll see markets trend higher again. Now seasonality, is based on year by year levels, but that's at least kind of the pattern we see. So we'll have to see if that bean market can kind of hold these key levels of support here that we put in on Friday, and again kind of tested and held today, and see if we can turn this market higher. It might be just a combination of what happens with corn and as well. If corn goes higher, beans will probably come with it. If beans lose their traction and fall apart, it'll probably put some pressure on the corn market, which is at the exact opposite top side of the range.
Well, thinking about that corn market a little bit and just the general harvest momentum as well, you alluded to it. A lot of beans ready in places. A lot of farmers prioritizing that over some corn right now, but still corn coming out as well. And I think the general consensus I've heard from a lot of growers, especially in the Western Corn Belt, a lot better yields than they anticipated, given the heat that they saw over the summer, John.
That seems to be a little bit of a theme. It typically kind of happens anyway in these windows because obviously the doom and gloom factor until you get the combines in the field. Again, working some beans over the weekend and talking to people in the area I was from, things were doing pretty well. They were pretty happy with the bean results These are a little bit small, but at the same time, still good numbers out there. We're seeing that too, and maybe some of the corn as well. So again, it just kind of depends on what the window was, where things got hit in terms of temperatures. There's going to be a lot of variability, I think, in this harvest again this year. So we'll see. Now the focus will be that October report. Do we get additional reductions on that corn and soybean yield, or do we get a little bit of a bump up maybe on that soybean yield given some of the later weather? Then obviously the biggest part, I think, this thing now, we kind of got an idea where the supply picture is going to be. We're going to see some further adjustments one way or another. Do we get some demand? I think that was what helped the soybean market today. It wasn't a big sale, but we did have that small sale of 110,000 tons of beans this morning to unknown destinations. So somebody likes bean prices down here at 1360 on the board, and they stepped in. So that's going to be the piece we need to get this thing moving here. Obviously, is going to be the demand side of the equation, to get this market at least get fired up a little bit, that we get some buyers into that tight supply.
John, you mentioned cash basis a little bit. As you're talking to growers, folks maybe you talked to this weekend, are you hearing a lot of this crop that's coming out of the field going straight to town, or is some of it getting stored? I wonder what that ratio could look like and how that could affect basis here over the next couple of months.
At least I think in the initial here, this market was trying to pull, especially corn bushels, out forward. But again, now you're starting to see that basis, at least in terms of things I've seen in our area, move back to those deferred contracts a little bit more. So saying maybe we got enough here at this time frame. I know there's going to be some concerns regarding the Mississippi River and its water levels and the ability to move barges up and down. So we'll have to kind of watch how that plays. If there's a way for a producer to get some storage, get out into that January, December window, excuse me, it might pay for you a little bit in that regard, just because of the bump on the basis side, as well as just maybe some potential strength in futures. So, but if you're going to take those risks, you're going to put the beans or corn in the bin to get to that little extra next tier. Definitely don't forget about the downside risk that's there, because again, we see how fast these markets can move. So if you're going to store it, just pick up a few cents, make sure you definitely keep some protection underneath, so you're not sitting back wishing you would have done something differently.
Glad you mentioned the Mississippi River issues. I know that's going to be just another transportation challenge, it sounds like, here as we work into the fourth quarter. John, as well, we were talking a little bit about export demand, and you brought up some demand just a minute ago. What are your thoughts on what you saw with export inspections on Monday morning? How is that looking overall on the grain side?
Corn and beans continue to be lackluster. And again, I think that might be due to just the tight supply that's out there versus the fact that demand is slow, okay, in that regard. We just got confirmation, even though they did bump the bean number up, there's still not many beans out there. And even though, and the corn number even got tighter. So that just kind of tells me that, the supplies are not moving. Now we'll start getting some fresh supplies in here. You'll start seeing those export inspection numbers start picking up here, because of those supplies are more available to the marketplace. So that'll be something we need to see going forward. Wheat market, that's a good place that, we've been seeing some decent movement there. Actually, the numbers there, I classify them as friendly. We're still a little behind the pace, what we need for USDA, but we're off to a good start, and that's encouraging. Now, if we continue to see some sales moving here, continue to get some bushels moving, that's going to stay supportive of that wheat market overall. We're watching that U.S. dollar. It's a big key factor here. I think that was something that really weighed on things in September. Did put a turn on the charts here, and it's starting to trend lower. Now we'll see how long it wants to go down, but at least at this time frame, that's maybe making everything ease off a little bit. And that was probably a little bigger piece of the puzzle today in terms of why we saw strength across the marketplace.
Well, and diving a little more onto the wheat side, I know we have drought issues in the southern plains, winter wheat planting ongoing right now. It's dry in Argentina. We have the Ukraine issue. So I know there's a lot of red flags ahead in this wheat market. What are your thoughts with how wheat acted on Monday? I know Chicago found a little pressure, while KC and spring wheat were just kind of quiet on the day.
Yeah, a little disappointing action in that Chicago market. We got 200-day moving average, 100-day moving average around this 920, 915 area. A lot of key resistance there. We haven't been above that area for quite a while on a consistent level. So there's some sellers sitting there. They're going to challenge the market. They're going to defend some of those short positions. I think we get through there, you can see a pretty big pop, at least on the technical side, as well as some stops triggering. So it's going to be a spot we kind of got to watch. Again, today, though, the sellers kind of won out in the long run as we faded off those highs. But really, we kind of just traded within the range on Friday. So consolidation is still in here. So next couple of days will be pretty key. Obviously, those southern plains weather conditions are going to be something we need to watch as winter wheat planting is kicking in. We need that moisture to get there. We haven't seen it yet on a full scale. That's going to continue to give some support into that crop, and that should help the wheat market overall. And you go globally, you just got to watch what's happening. Obviously, European wheat out there, the Russian wheat crop, what's going on in Argentina, some issues in terms of crop production down there that could be helping support this market. Still like the wheat market, at least where it is at this time frame, for maybe some move higher, but we need just some positive news, again, to make some money want to flow into that market. The funds are still sitting relatively short, not a big short position, but they are short wheat. Maybe a little news will help get them out of that market, which could lift this market, or get out of that short position, which could lift this market higher.
John, as we think about, we saw the small grains quarterly grain stock summary out now. We have private production estimates set to be out here this week ahead of the October WASDE coming up next week. And what are your thoughts after we've seen the numbers from Friday from USDA? We think about some of the yield ideas, some of the chatter out there in the market. What are your thoughts heading into this October WASDE report, A, and B, does it feel like there needs to maybe be some risk management assessment in play ahead of that report in case we get some surprises?
I think you got to all the way across the board here, just regardless of what grain you're talking about, not just mentioning the macro side and the concerns regarding the economy and what could happen in money flow. When you're still looking at historical values, as price continue to firm, you need to be on the defensive side to protect that value, whether it's making some light sales and getting some reownership, make sure you keep some puts underneath just to build that floor. Even the wheat market, you're back above $9. We were at 760 just a handful of weeks ago. So that's a heck of a move, to start protecting some value that's in front of you. So that's going to be still the key in my mind. If we continue to see prices move higher, make sure you're building something underneath. If you're going to store it in the bin, get something underneath that bin out into the spring. If you're going to, if you're looking at next year's crop, make sure you got something starting to work. There's going to be a lot of variables coming into play over the next handful of months that could move this market quickly one way or another. So make sure you protect value using some type of strategy. But I like that flexibility side of the put option, so at least keeps those prices available to you to the upside.
John, let's talk livestock. Looking at the lean hog market first off on Monday's trade. Not a bad day. A little bit of support maybe being found here at some of these levels that we've come down to in hogs. A little spreading, it looked like, with October against some of the deferred months, though. What's your thoughts on this hog market trade as we start the fourth quarter?
We had decent move in retails today. That helps support the market a little bit. $5 higher in carcasses at midday. But we can't get that cash trade to get any traction. That's still something that concerns me at this time frame. Quarterly hogs and pigs numbers, they come out on Thursday, and again, not showing much expansion, which keeps me friendly to this market in the longer term. But at least right now here in the front end, we still got a fairly decent amount of hogs available, and that's kind of weighing on the market. We saw that rolling action today, getting out of the October contracts, moving them out into December as we're getting closer to the expiration on October. That's where we saw that buying strength in December today. And December looks undervalued. You got the index at 94, December at 77. The hog number is still staying tight. If we can keep the demand going to the consumer, that December contract probably has some room to work itself a little bit higher here, at least narrow up that gap to the index. So, the hog market still is not out of the woods. We're consolidating at the bottom of these ranges, and after this hard sell-off, and it was aggressively how this market came down. So right now, it just needs the right bit of news, maybe to get that money flow in the right direction. But I'm still very, very cautious here that maybe we're just building up some bull or bear flag formations that we get a further break if things stay on the negative side, especially in the news front.
Definitely. Well, thinking about the cattle market as well, probably getting a little support, I would think, from the positive stock market day on Monday. What's your thoughts in this cattle trade right now, John?
Cattle market's been beaten up, not quite as bad as the hog market, but pretty beat up here, especially given the supply numbers. We've seen cattle on feed numbers come out here again a week ago. We're basically in line with last year. Placements continue to stay a little bit lighter, overall, even though we were up above expectations this last month. The cattle supplies still just look tight. But again, it became the anti-inflation play. It became the recession play. As the stock market tumbled, that money left the cattle market as well. So it was nice to see some spin back today in the equity markets, and that I think did step in, help out live cattle and feeders. Just a market that's strongly oversold overall, even with corn being a little bit higher today. So to me, it looks like a value here, but kind of like hogs, a little cautious of it. Just don't like the way the charts are setting up until we get some news that really wants to make this market move a little bit higher. I think there's some downside susceptibility still there just from the technical standpoint. If we break through these lows, if that core market decides to kind of really kick in and take out this top of the range, feeders are going to probably be on the back side of that, even with the tighter supplies. So, looking at the cattle market, we're hoping we get some footing here. It is undervalued in my mind when you see what's going on in terms of the countryside versus the futures market. But at the same time, though, we need something to be a trigger to get the money want to come back in and push this market back up.
You wonder as well, some of that money coming back into this cattle market, could it be something where we don't really see that buying until early next year? I wonder if that could be the case possibly in this cattle market, John.
Very much so. We're still looking at front end supplies that are relatively comfortable. The cash market is higher. I mean, we're up 143 last week, just a tick or two higher, still well supported historically. So it might be just a window where we just go sideways for a while here until maybe we see some movement on the demand side or some movement on the cash, reflecting those tighter feedlots getting out there as we move into next year in 2023. So, again, I still like the longer term view. You still got a lot of good value. Again, like I've said before, as market prices climb, don't forget about those puts underneath. For our newsletter, I was buying 150 puts all the way out into June over the last handful of weeks before this market rolled over, protecting that live cattle market because that's just historically a good price. And, unfortunately, with the market pulling back, we're starting to see those puts kick in. But at least it was nice to know for that producer that if something really fell apart, they still protected a historically good value.
John, let's talk the dairy market as well. What are your thoughts there as we start the month of October?
We've seen a nice recovery in those milk prices. Again, watching what's going on with blocks and barrels. Again, milk prices back above 21, maybe getting a little bit range bound between 21 to 20 or 20 to 22, 21 and a half again. So watching what's going to happen on demand front. We saw a decent move in cheese that kind of helped firm this market back up. Hearing a lot of decent chatter about export demand. Obviously, it's football season. Pizza season comes into play here too. So right now, milk market, pretty much a sideways market, getting a bit of a wide range, but at this time frame, still good value for producers to take advantage of. Make sure you're managing that risk, looking at some of the programs that are out there or using defensive strategies. Again, still with like milk market, like all the others, we're not too much news away from a good move one way or another. Make sure you maintain price flexibility, and that's where finding those fixed floors with open upside is still going to be very, very key. And then you can work your marketing plan around that type of a structure.
Well, John, great stuff as always. Before we run out of time, the floor is yours. Anything else you want to mention or anything else you want to reiterate here today?
Watch those outside markets. What's happening with the dollar? We got a lot of different things happening politically. You got Brazil going into elections. Which party pulls out there may be a factor on the Brazilian currency, how that plays into the U.S. dollar index. We are not out of the woods on the negative side in any of these markets right now. So that keeps me very cautious here. All it's going to take is some bad news or a black swan event one way or another, and we can see prices quickly tumble. So again, stay cautious, stay optimistic, but don't be foolish. Take advantage of good prices when you have them, but then find a way to keep your flexibility open to the upside, because one weather event in South America over the next couple of months, and we could see prices move significantly higher on those globally tight supplies.
Well, John, the producers want some advice. Want to talk to you, the team there at Total Farm Marketing, about their marketing strategy. What's the best way to get a hold of you?
Sure, I'd love to chat with them anytime. Feel free to give me a call, 800-334-9779. Shoot me an email, johnh@totalfarmmarketing.com. And again, don't forget about our website, totalfarmmarketing.com. A lot of great information for producers out there. I know times are busy. Feel free to pick up the phone, no obligation, just to have a conversation.
John, always a pleasure. Thanks for the time. Enjoy the rest of your week, sir, and we will talk to you next week.
Sounds good. Have a good week, everybody. Stay safe in the harvest.
John Heinberg with Total Farm Marketing here on Market Talk today. That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.